My personal view, and I've been consistent on this, is that I think we see the top in the markets around August 15th, August 20th, when those new cycles of estimates come out and people start to get scared. Because as you know, we are heading unavoidably into a recession. You just simply can't stop it. And your market protect it, because one of the ETFs takes you long, the other ETF takes you short, and you're capturing the toll in between. It pays you monthly. And we're showing our clients how to ratio that trade, what percentage should be in each one of them to be able to protect yourself.
And good afternoon, everyone. Thanks for joining Bob Kudla with me for another month of trend analysis. Where are we moving from here through actually the summer and then into the fall? Well, fall, you could expect prices to drop. During the summer, we're looking at a rocket ship upward. And again, how do the rich trade? Now that's a very important thing to think about, is how do the rich trade? How do they protect their money? How are they able to control this and hold on to it during good times and bad times? That's one thing we wanted to talk about today. But this summer trading with Bitcoin, with oil, with the metals, and I was going to say, where should we start today? Usually we start with a topic, but there's so much going on, and it's an overwhelm in the news at all times. So I really, would say I don't even know where to start, because there's a blistering scatter wave of so many things happening. So how do we laser our niche down in so we don't get, disrupted in the scatter wave out there? So Bob, appreciate you joining me.
Yeah, we'll try not to be scatter waved on this this podcast. So, which Dave and I have a tendency to do, but just real clear too for people listening here. So we can just give you the details right away. Then you can kind of listen to us banter. Is that, look, we're expecting a summer spike in asset prices. Seasonally, the next 2 weeks, what's today, Wednesday, the 26th, when we're talking. So seasonally, between now and like the 12th of July, that 2 week period of time is extremely bullish. Average 2.5% move higher in prices. The summertime in an election year for a first-term president, you tend to have a move from pretty much from June 15th to the end of August of about 7% move. Okay. Oil tends to start moving now, and it already started last week into September. So that's kind of good news, bad news. I think it sets up the bad news later, but energy names will do well. And then Bitcoin is people are probably scratching their head. Oh, we had the halving, we should be blasting off to the moon. What people forget is the Bitcoin miners are getting half the rewards right now, and they basically did a supply surge. They're dumping their inventory so that they can make especially the public companies are trying to make their revenue and profit targets for the quarter. And so they drove their inventory, Dave, down to 14%. Yesterday, we got our first pop in Bitcoin reversal, and we think might be choppy for a couple weeks here. Depending on who you believe and how you believe the seasonals, is that liquidity plays a big role. So this summer liftoff in stocks should help Bitcoin, but also there's a cycle analysis that said, hey, it could drop into the end of July. But then there's a supply shock window, 120, 150 days after the halving, which comes in July, August, that can basically moon Bitcoin. So our view is those three asset classes should be up, and up. And then once we get out of Labor Day or into Jackson Hole at the end of August, and elections start to get real, and people start to size up what their next 4 years or the rest of the country will look like, is then I think things will get a little bit more dicey. We're going to go through another earnings report here, in that July 15th, August 15th window. And that usually sets the stage for the next quarter because of all the the analysis and estimates for the next quarter. My personal view, and I've been consistent on this, is that I think we see the top in the markets around August 15th, August 20th, when those new cycles of estimates come out and people start to get scared. Because as you know, we are heading unavoidably into a recession. You just simply can't stop it. You might get a little bit of a bump with the anticipation for a rate cut in September, but rate cuts, once they're initiated, they tend to be extremely bearish for the stock market, okay? Because it's foretelling that there's not enough credit, interest, or availability or desire. And stock markets, almost one-for-one correlation, money supply to stock market value. So as loans dry up and defaults and payoffs happen, you have a situation where the stock market is going to follow the money supply. And the money supply cannot be, the government can't outspend the money supply, okay? Especially now that there's no way that the Republican House is going to give any kind of advantage to Biden going into the election. So you're going to have a money supply issue. And that manifests into lower stock prices in the fall, recession, lowering interest rates. All that means that this move that I see happening by summer's end will probably be the cycle high. And then we may wait 2 or 3 years till we have an issue with the bull market starting again. So that's kind of my thumbnail on this. Now I want to give you guys some good news. I'm going to tease you, and then at the end I'll give you an answer. But there's new retail ETF products that are coming out that you can actually position yourself to be almost market neutral, and the dividend yields that have been pulling off of this is about 50% annual yield on the dividend. And you're market protected because one of the ETFs takes you long, the other ETF takes you short, and you're capturing the toll in between. It pays you monthly, and we're showing our clients how to ratio that trade. What percentage should be in each one of them to be able to protect yourself. So there's no longer a fear the bear kind of environment out there. And this is the first of many products that are coming out. There's going to be 5 or 6 of them. If you're worried about Bitcoin after its pop, there's going to be a way in which you can leverage being Bitcoin long and Bitcoin short, picking up a yield that's currently paying out. Right now it's paying out about 90% yield, but that yield with a hedge could be another 40 to 50% yield with market neutral. There's going to be one that's long and short NVIDIA. There's going to be one that's long and short Apple. These are going to be some great products out there, and we'll be able to show you guys how to trade it. And if no matter what package you buy from us on the stock side of Trade Genius, you'll get access to our communication on that. And it's so cool. I mean, I've been loading up as these been coming out. I went from 0% in these things to now 15% of my portfolio in these products. And as more and more of these hedges come out, I'll probably bring it up to 30 or 40% of my portfolio. And wouldn't it be nice to not worry about the market and still collect a nice coupon every month? I would argue with you, very few people can make these kind of yields on their own, and they're available out there for you. And so we'll show you guys how to trade them.
Yeah, that'd be... Somebody's seeing the need for that in the future. So these products evolving as they go, then somebody sees where the problem is going to be a little further down the road, out with a bit of binoculars that we don't have, that's already created these products for the conditions that will evolve. So somebody's seeing that market conditions are about to change depending on, which way the ball swings, to the donkey or to the elephant, and the world events occurring right now. So why would these products suddenly be made and available if there wasn't going to be a need for that to protect?
We don't have to worry about not having food to last. We have my Patriot supply. And right now, you can save $200 on a 3-month food kit with Adapt 2030. Adapt and stay prepared.
Yeah, and the long part of, and you have to understand, this is how the rich have been trading forever. It's just that it requires so much margin, cash sitting in an account to protect the way these positions work, that it just wasn't feasible for them. You and I would have to make a lot of money and have it professionally managed to be able to get these kind of. They've been doing these forever and ever. I've been doing these synthetically myself, and they're very hard to do. And not, when I mean hard to do, you just always have to be paying attention. And so these ETFs have come up, they've done that work for you. And they're not making market direction decisions. One of them's long, one of them's short. And you just simply, you can actually just match them up 50-50, or we like to do 70-30s on these. And you have a very, very market neutral in terms of the portfolio value over time. And it's just an awesome product. And the first one has already come out that's market neutral, and then 5 more coming out, and it's really, really cool. So you combine that with taking these sector bets, and you'll be able to do very nicely for yourself as a retail trader and or investor. I mean, I have clients that don't trade at all. They just own these things, and they're just looking for us to say, hey, this particular ETF has run its course. You may want to now slide over to a different sector ETF and collecting coupons. And so really, really cool. You have to go through Dave's site here.
And that's tradewith2030.com if you want to access that information Bob was just talking about.
We give you an awesome discount if you hit that website, even bigger than the one we have for ourselves. And I support Dave on his show by doing this. And so it's a win-win-win. We're going to help you make money in the markets. Dave gets to continue to provide this great source of information. Then obviously we benefit because our business succeeds. So check us out, and you guys are going to love these products. You're going to be like, I can't believe they've never had these before. So we're pretty stoked, and I know these things work because I do them myself before they became ETFs, and it's just, these things are going to probably explode onto the scene, and we're going to put you in a position where you can be successful with them. Combine that with just getting these sectors correct, you're going to be in really good shape. If you think the tech market's going to get destroyed, you're going to be able to hedge against a tech wreck, and then in the meantime pick up a dividend as it's falling, because shorting is very, very hard. But when you short the way these products work, you basically pick up a dividend as price fluctuates. It's just these are just awesome products. And we explain to people what we're doing in our rooms. So check it out. If you want to just be in the room that just gets the signals and have type chat, the one service for Dave. The one that you want to get in the room and voice room, like Dave and I are talking, that's the other one that Dave offers. And you can do that with stock. You can do that with crypto. And so check us out. I think you'll like it, Dave. A lot of people have been joining from your room here lately. I think people are pretty excited about what we're doing, and I'm obsessed with this stuff. I love it, and I definitely want to keep people on the right side, because these next 2 to 3 years are going to be absolutely scary.
Yeah, that's the thing. People are starting to wake up and realize everything we've talked about was maybe chatter before, but now it's so in the face that anything. I was talking to somebody who was doing affiliate sales for long-term storable foods, and they were reading all these reports about that industry, and they're like, you don't even have to really sell it. Everybody realized that there's something crazy coming this way, that the world has completely upset itself. So now are people into the protection mode. So how do you protect yourself during this time? So i.e., here's one that I've been looking at, is operational loans for farmers. Because if you're talking about, credit drying up, then how are our farms supposed to operate if there's no credit out there? When you referenced that a little bit earlier with either cutting the interest rates here with the Fed or whatnot. But this is one of the things, with the water shut off in Idaho, are they going to even be able to pay their loans back, or is their farm going to be confiscated and called in on those loans? But then how does it work for next year? Operational loans are the most important thing for our farming industry. If you don't have that, you don't have food. And then we talk about food costs getting gargantuanly high. And then we're right back to the same point again. Like, how do you protect yourself from that?
My strategy in life is that you've heard the old story that you and I are walking in the woods, and we come upon a bear, and you start running, and I sit on the rock and I put my sneakers on, and you're like, hey, dude, you can't outrun the bear. And I said, I don't have to outrun the bear. Okay. I just have to outrun you. And that's how you have to look at it. So You don't have to worry about absolute gains. You just have to be relatively better than the market environment. And so there's products out there, tools out there, trades out there that anybody, no matter if you have a small account or you're super rich, these are retail available, and they're not difficult to trade. It's just that people can't wrap their minds around them, which is great news for us because we won't have much competition for these for the longest time, and it'll keep the yields higher. So that's how we're doing it. If you think we're going to have 10% inflation for the next couple of years, and you can outrun that while the market's just going absolutely haywire, you're in great shape. Remember, you have to take care of your family first, then your friends, your community. But you have to be in a position that you're not also a victim.
Now, speaking of that, you talked about Bitcoin for a second there, and some of the metrics or mechanics pushing Bitcoin price at the moment. Now, I was just reading Mt. Gox may or may not release 170,000 Bitcoin coming up here in November. Timeline. So if that were to happen, like what would happen with the price? You were talking about oversupply with the miners.
Yeah, nothing.
Nothing.
Don't worry about Mt. Gox. Yeah, they think 80% of the people are going to just keep them anyway. So you're going from 170,000 down to what, 30,000 it may trade. What is that? 8 days of supply. It's like nothing. I think, what are we doing? How many? 9,000? How many coins a day anymore? So it's Mox Nix, okay? And they're not releasing it all in one day. I think it's going to dribble out. The bigger issue is what we just saw is that you had the Bitcoin miners releasing their inventory to make their quarter. Look, this is how you have to look at Bitcoin. Bitcoin, you want to own Bitcoin or Bitcoin-related assets for protection against the banking system collapse, okay? You want to own gold and silver and its derivatives for what I would call generic currency collapse. Now, I'm not a dollar collapse guy because the dollar will reign supreme over all other currencies. It's just that what will the dollar buy? So you want to own those products. I love energy because big money can't get into those other products very easily because they would just spike the price too high and make it actually unaffordable for them, be too volatile. But oil markets are big enough to absorb big money. So energy is going to remain elevated in this environment too. And so then there's going to be selected tech or selected food companies that will benefit from inflation. And then everything else is going to go to crap. And so that's how you have to think of things. And look, these central banks around the world know that they have crosshairs on their backs now. So they have to thread a needle. These governments the leftist governments are rapidly losing power around the world. And they're going to throw as much money at at their constituents as possible until they lose the elections. That's going to manifest with inflation. So I call what's going to happen is an inflationary depression. The issue that we won't be able to resolve is when you get supply shocks. So when there's going to be a food supply issue or an energy supply issue, central banks can't fix that. Governments can't fix that short term. And that's what's going to end the whole party. But in the meantime, they're going to keep throwing money at the problem and until it totally collapses out. And then you just have to be in those things that benefit from what I would call the monetary dilution. And then you don't have to worry about it. So many people that are of our ilk, Dave, just get so upset and angry. That's the wrong mindset. The right mindset is to front run it. You need to be in front of it. And I think that was the reason why I started Trade Genius. I think that's the reason why you started Adapt. Was it now 9-10 years ago for both of us together doing this, is that it doesn't pay you to get anxious or angry. What pays you is to be in front of it. Okay. Don't be guilty by profiting from this stuff if you do it legally, right, and morally. And just remember, to give back as you can. And other than that, they're telling us what they're doing, Dave. The climate story is telling us what's going to happen. These things are baked in the cake, and you just have to then trust that and trade that way. And that's how we do it. We look at seasonalities, then we look at momentum, then we look at the the trends, and our algorithm places those trades. You've been looking at, the sun cycles, the planetary cycles, the galaxy cycle, AMO and PDOs, the MJO, and these things, you can't hide these things. You can try to deflect it and confuse people, but plus AMO means a lot right now, and we're starting to see what that's going to manifest into cold, right? So then just be prepared for it. It may not happen today or tomorrow, but it's happening. Remember, people laughed at us, Dave, in 2015, 2016, when we told people when you get to 22 to 24, there's going to be all kinds of issues. And lo and behold, it was simply math.
It always is. And I'll add into that Atlantic, water temperatures you're talking about going into the positive phase there. Pacific Ocean's dropping into La Nina, and also the Indian dipole is going into its cold negative phase also. All in unison at the same time. So you have to think about how that might bend weather patterns, send more precipitation, like we're seeing record floods across China right now, Vietnam. We're seeing snow and elevations across Europe, along with the floods. Here in America, we're seeing dams destroyed by overflooding. So it's really starting to hit now. And then a lot of that water vapor coming out of the canopy now with the Hunga Tonga, that water vapor, 14% more moisture in the atmosphere after Tonga. That is now starting to precipitate out. So we have all of these things happening. So think about your air conditioner for a moment. You ever been under it in the older air conditioners where, the copper cooling and you could feel the moisture on the outside? When I put 3 cold oceans in there and then suck that moisture out of what was up in our atmosphere from the Hunga Tonga eruption, and you'll understand why the mechanisms are pushing for a lot more food disruption. That's just simply what we were talking about. And once you understand, okay, food's going to get way more expensive, it's going to catch a lot of people off guard. They might panic in society. So how do we, like I say, front run that? How do you take advantage of it in a giving fashion where if you do understand that information, you can help other people move through? Then how do we all put this as a nice succinct package of information so people, that there's a service out there for, these bits of knowledge that can be used and actuated upon so we can live better lives and then help other people live better lives. And that's really what we've been talking about.
Yep, absolutely. And, and guys, this is this really interesting stuff. You need to educate yourself. And, with that, Dave, I got to run if you don't mind.
TradeWith2030.com. That's where you're going to want to go. Take advantage of, Bob's expertise. I do. TradeWith2030.com. Any last words, Bob?
Yeah. Hey guys, don't fear the bear. Enjoy the summer rally, and just make hay while the sun shines. And then when fall comes, it won't be a metaphor. It'll be real. It's important that we all help each other in this environment. And I appreciate it, Dave. And I'll catch you sometime in July.
Brought to you by ITM Trading. ITM Trading has spent the last 28 plus years developing a team of expert researchers and gold and silver analysts to make this possible. Simply put, we build strategies which are historically proven to protect your wealth and assets through any economic downturn. 866-834-1422. That's 866-834-1422.